$438 billion, a 155% jump in first quarter deal value.
12 megadeals over 10 billion. It's giving major 2008 energy. And the wildest part, the buyer's curse is dead.
Oh, come on. Acquirers underperformed by 14 points last quarter.
Yes, but now they're outperforming by 2.5. Wall Street is throwing a parade for anyone buying AI.
I need to see the footnotes before I buy the confetti. Let's look at what's actually driving this. Inquire. The rundown.
I am genuinely trying to figure out exactly when the market collectively forgot how to punish buyers.
You are talking about the buyer's curse vanishing.
Vanishing overnight. Last quarter, if you announced an acquisition, your stock underperformed the broader market by nearly 14 percentage points. You were sent straight to the penalty box. Now, first quarter closes and acquirers are suddenly outperforming by 2.5%. They are the market darlings again.
It is because they are buying AI, Nate, or at least claiming to. Market analysts are watching these well-capitalized deal makers just aggressively overpay to secure anything resembling AI-enabling tech. But the raw volume is what actually shocked me. First quarter deal value just hit $438 billion.
Wow.
That is a 5-year high, a 155% jump year over year. And the Megadeal is back. We saw 12 transactions over $10 billion. We have not seen that many massive deals in a single quarter since 2008.
2008, always a highly comforting year to draw financial comparisons to.
Exactly.
We are seeing the volume everywhere, though. GDC IT Solutions just picked up global help desk services to expand their outsourced IT.
Shionogi officially closed its sweep of all the Radicava intellectual property from Tanabe Pharma. Just a very clean, quiet pharma IP grab.
And out in the Asia-Pacific market, Bain just flagged the Kinetic buyout as the standout private equity deal of the quarter, $1.8 billion.
Speaking of private equity, Antin Infrastructure Partners just bought Sapphire Gas Solutions from Apollo Funds.
I actually love this deal. Sapphire does compressed natural gas. It is a perfect bridge asset for the energy transition narrative. Antin gets a solid scaling utility player with predictable cash flow.
Oh, come on.
What? It is a smart strategic play.
It is Apollo. Do you really think Apollo left a single ounce of meat on that bone? I was looking at the history there. Apollo held that asset, squeezed the absolute maximum yield out of it, and is now handing Antin the rind.
You are incredibly cynical today. Antin is well capitalized. They can scale the operations.
I will bet you a steak dinner. Antin quietly writes down that asset within 18 months.
Booked. Medium rare. But look, with this massive 155% volume spike across the board, the real story is what we cannot see yet.
Right. The delayed regulatory filings. We are expecting a flood of them next week from these late quarter mega deals.
Especially in energy and tech, the financing conditions are just too good right now. And private equity is hungry for take privates. Which brings us to the absolute wildest bidding war of the quarter. The big one. $438 billion in one quarter. I had to refresh the terminal 3 times this morning just to make sure my eyes were working.
It's not a typo. It's a 155% year-over-year increase. And the crazy part is the concentration. We just saw 12 transactions cross the $10 billion mark. 12. We haven't seen megadeal volume like that since 2008.
And we all know how 2008 ended. But right now, the mood in the syndication desk is pure euphoria. Because it's not just the sheer volume. The buyer's curse is officially dead.
Dead is a very strong word, Nate. Maybe heavily. Voices.
So Wall Street is officially declaring the buyer's curse dead. Just last quarter, if you announced an acquisition, your stock got absolutely hammered. Acquirers underperformed the wider market by a brutal 13.9 percentage points. Now, they're beating the market by 2.5%. Investors are literally throwing roses at anyone buying AI tech.
I read that same analyst note and I completely disagree with the premise. The buyer's curse isn't dead. It just got temporarily smothered by the AI hype machine. You say you're buying critical AI-enabling technologies to scale operations, and suddenly your stock pops. It's a sugar high.
Oh, come on, Maya. You can't write off $438 billion in Q1 as just a sugar high. That's a 155% jump year over year. We just saw 12 megadeals over $10 billion. We haven't seen megadeal volume like that since 2008.
Which went so well for everyone.
Point taken. But the capital deployment is real. Look at the private equity commentary. Industry watchers are saying PE firms are taking public companies private to unlock value through, quote, rapid decision-making and focused governance.
Focused governance. I genuinely love when they use that phrase.
It's the ultimate banker translation for firing the entire board and doing whatever we want behind closed doors.
Exactly. And hiding from the quarterly earnings circus while you slash operating expenses. But I'll concede that financing conditions have flipped in their favor. They're well capitalized and ready to hunt.
Which is exactly why we're watching the tech and energy sectors so closely for the next wave of take privates.
Speaking of watching things closely, we have a massive backlog of delayed regulatory filings from these late quarter megadeals hitting the tape tomorrow. I'm clearing my entire morning to read the footnotes.
You and your footnotes, let's see what actually got buried in the fine print when we open those up. Spill the tea.
I'm just trying to figure out when the market collectively decided that buying companies was a good idea again.
About 5 minutes ago. Seriously, the whiplash is giving me a neck ache. Last quarter, if you announced a deal, your stock got taken out back and shot. Acquirers underperformed by almost 14 points.
13.9 to be exact.
Exactly. And now, first quarter, acquirers are beating the market by 2.5 points. The buyer's curse is magically cured.
Cured or just heavily medicated with AI hype? Look at the data, Nate. It's not a broad market endorsement. If you buy a tech company and say the letters A and I 3 times in the press release, investors throw roses at your feet.
Oh, come on. It's not just tech. Look at the sheer scale of the rebound. $438 billion in Q1, a 155% spike. We had 12 deals cross the $10 billion mark. 12. We haven't seen that volume of megadeals since 2008.
Which is exactly why I'm terrified. 2008 is not the vintage you want to brag about.
Fair point. But even outside the megadeals, private equity is getting incredibly aggressive. I was reading this analyst note about PE firms taking public companies private to, quote, unlock value through rapid decision-making and focused governance.
Oh, I love that translation. Focused governance. That's just PE speak for firing the board and making brutal cuts without having to file an 8K every time you sneeze.
Spoken like a true cynic. But they're moving fast. Apollo just dumped Sapphire Gas Solutions to Antin, and we're seeing PE swarm the energy sector now that financing is cheap again.
Well, speaking of things hidden from the public eye, we've got a massive pile of delayed regulatory filings from these late quarter mega deals dropping tomorrow.
Oh, the Friday night data dumps, my favorite.
Grab your reading glasses. Let me tell you exactly what I'm looking for in those footnotes. Tomorrow's radar.
Looking at tomorrow, we have a massive backlog of delayed regulatory filings hitting the tape. 12 $10 billion mega deals in Q1. The SEC server is going to melt down.
I am already refreshing Edgar. I need to see the footnotes on these AI tech plays. Acquirers actually outperformed the market by 2.5 percentage points this quarter.
Which is insane. 3 months ago, they were getting punished. A brutal 13.9 percentage point penalty just for doing a deal. Now you whisper AI enabling tech, and your stock jumps. The buyer's curse is dead.
It is not dead, Nate. It is just hibernating. You cannot tell me private equity firms taking these tech companies private are actually going to unlock value just through focused governance.
Oh, come on. Favorable financing is back. You take a bloated firm private, strip the bureaucracy, it works.
Focused governance is just a banker buzzword for firing middle management. I will believe the synergy numbers when I read the actual filings tomorrow.
Send me the worst footnote you find. We will tear it apart on Thursday.